That sinking feeling when the market crashes. Your investment value is dropping day after day. The fear, the uncertainty, the urge to sell everything and cut your losses. We've all been there. That moment of panic, staring at your portfolio, wondering if everything you've worked for is slipping away. But what if I told you that market volatility doesn't have to be your enemy? What if instead of fearing these ups and downs, you could use them to your advantage and turn them into a powerful wealth-building opportunity? I'm Jiten Modi, your personal finance strategist. For over 2 decades, I've guided countless investors through market cycles, bull runs, crashes, recessions, recoveries. I've seen people lose fortunes by making emotional decisions. And I've seen others quietly build massive wealth with just one simple, disciplined strategy. And today I want to share that strategy with you. It's not a magic formula. It's not about timing the market. It's about something that has stood the test of time. Systematic investment plans, or SIPs. By the end of this video, you'll understand why SIPs are not just another investment option, but a game changer for anyone who wants to invest with confidence. No matter what the market throws at them, you'll learn how SIPs help you navigate volatility, build wealth steadily, and most importantly, give you peace of mind. Because investing shouldn't be stressful. It should empower you. Let's start with a simple truth. Nobody can predict the market. Not me, not the world's best investors, not the analysts on TV. If you're waiting for the right time to invest, you'll always be waiting. That's where SIPs change the game. A systematic investment plan is a way of investing a fixed amount regularly. Every month, every quarter, or at any frequency you choose, into mutual funds. Instead of trying to predict when to invest, SIPs let you invest automatically, purchasing units at different price points and averaging out the cost over time. This strategy is powerful because of something called rupee cost averaging. Here's how it works. When markets dip, your fixed SIP amount buys more units. When markets rise, it buys fewer units. Over time, this smooths out market fluctuations and reduces the risk of investing at the wrong time. Think of it like shopping during a sale. You get more value when prices drop. Over the long term, this strategy helps you build wealth without worrying about market volatility. But SIPs are not just about market fluctuations. They're about discipline. They turn investing into a habit. Let me tell you about Rahul. In 2020, when markets crashed during the pandemic, investors panicked. They pulled out their money, fearing more losses. But Rahul, he continued his monthly SIP of Rs 10,000 no matter what. Fast forward a few years, and his investment had grown by over 150%. He didn't need to time the market or make emotional decisions. He just stayed committed. That's the power of discipline. This is where most investors go wrong. They let emotions dictate their investments. They get scared when the market drops and sell at a loss. They get greedy when the market is high and buy at inflated prices. This cycle of panic buying and selling destroys wealth. SIPs take away the need to time the market. Instead of chasing short-term gains, you focus on long-term wealth creation. Another reason why SIPs work so well is compounding. If you don't already know, compounding is your money's ability to generate returns, which then generate more returns. The longer you stay invested, the stronger this effect becomes. Think of it like planting a tree. You don't dig it up every day to check its roots. You water it, you let it grow, and one day it provides shade and fruit for generations. Priya's journey is a perfect example. In 20 pacing, she started a small SIP of Rs 5,000 per month. That's all she could afford at the time. Through market ups and downs, she never stopped. Today, her portfolio has grown to Rs 15 lakhs. She didn't predict market trends. She didn't chase hot stocks. She simply stayed consistent. What makes SIPs even more powerful is their flexibility. You don't need lakhs of rupees to start. You can begin with as little as Rs 500 and increase your contributions as your income grows. This makes investing accessible to everyone, whether you're a student, a salaried professional, or a business owner. Now, I know what some of you are thinking. What if I start my SIP when the market is at a high? It's a valid concern. But here's the truth. Historical data shows that SIPs held for 5 years or more rarely lose money, regardless of when they were started. In the short term, markets are unpredictable, but over the long term, they tend to grow. The longer you stay invested, the less the starting point matters. SIPs also provide diversification. When you invest in mutual funds through SIPs, your money is spread across multiple sectors and companies. You're not putting all your eggs in one basket. You're creating a well-balanced portfolio that can withstand different market conditions. Another common question I get is a lump sum investment better than an SIP? Even the best investors struggle to predict market bottoms consistently. If you wait for the perfect time to invest, you might never invest at all. SIPs remove that pressure. They turn market volatility from a threat into an opportunity. Take Ravi's example. He had a large sum sitting in a savings account, unsure of how to invest. After assessing his goals, we structured a plan. 50% of his money into equity SIPs for long-term growth, 30% into debt funds for stability, and 20% into gold and real estate for diversification. Today, his portfolio is growing steadily while managing risk effectively. SIPs are not just about investing. They're about goal-based wealth creation. Whether you're saving for a dream home, your child's education, or a stress-free retirement, SIPs offer a structured path to achieving financial goals without the burden of market timing. So, whether you're an experienced investor or just starting, SIPs provide a simple, effective, and stress-free way to build wealth. They turn volatility into an advantage, remove emotional decision-making, and keep you focused on the bigger picture. The best time to start investing was yesterday. The next best time is today. Imagine looking back a decade from now and realizing you missed out on substantial wealth simply because market volatility made you hesitant. The cost of inaction isn't just lost returns. It's lost financial security, lost opportunities, lost peace of mind. Every day you delay, inflation and indecision erode your future wealth. The biggest enemy of financial growth isn't market swings, it's procrastination. If you're ready to take control of your financial future, book a free clarity session with me. We'll craft a personalized SIP strategy that aligns with your goals and risk tolerance. Click the link in the description to get started. Or if you prefer to learn at your own pace, download my free ebook, where I reveal the exact strategies my most successful clients use to grow wealth with SIPs. The best time to start investing was yesterday. The next best time is today. Let's make your money work for you, starting now.